Good morning, traders. It is Friday, August the 16th. Taking a look at the charts, we're going with the SP 500. Not a whole lot has really changed in our overall analysis. What we're looking at here is simply we've had this big sell-off, this kind of oversold bounce and reaction, and we're in this potential area here where the market could roll over and let loose for another leg down to test this potential low over here, or potentially even go lower than that. Now, this type of price action right where we're at this week is very similar to this type of price action. It's similar to this type here. We're just on the verge of breaking down. Again, something like this. It's something like this. It's something like this. We're kind of in this level here where the market is on the verge of potentially having another leg down. And we'll see if it puts in a double bottom or not. This could be down in this range here. It might come down, tag a double bottom. But overall, the momentum, the selling pressure is still pointing to lower prices. We are in favor, or we are using an inverse ETF to come down to test these levels to see if the market is going to continue to move down and continue to sell off. And if that happens, we should see the safe havens continue to hold their ground. But things are starting to get a little long in the teeth in terms of the safe havens. They're starting to hit some of our first targets. And let's just take a look at the TLT. And let's just go back to, let's go to the monthly chart. And if we just look at this long-term range, let me just clear up some of this stuff here. If we look at the long-term range here and just draw some trend lines, you can see we're getting back into this type of parabolic move. We've got this kind of support channel, this resistance channel. Price has spiked up. We've seen these big parabolic spikes in bonds happen before. You can see how we get up to these upper ranges and you can get these big sell-offs. Obviously, this was the 2008 market crash, and we had the real estate, everything kind of taking place these different ways. And here we are at the upper end of the range. So I'm feeling as though we're going to see bonds. This is the monthly chart, so we still could see potentially a few months of it trading up here, maybe spike through it. But overall, it is in the upper end of its range, and we could very easily expect it to move back down into some consolidation point. If we just draw a line straight across the chart here, you can see we've got several areas that will act as support. We've got levels here, 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 and this would be where we could easily see bonds pull back. So bonds, very strong run. Everybody's piled into them, but they are looking long at the teeth at the upper end of their channel, their rising channel. So got to be aware of that. If bonds start to pull back, maybe we'll see that safe haven money start to flow into another safe haven, potentially metals, and we see those continue to go higher. Now let's take a look over at gold. Gold down 0.5% this morning, silver down. Gold's starting to break out of its range. It's having its first real pop into resistance here. This is the first kind of key target we're looking at is around this 1550 area. More or less the upper candle has hit these levels. You can see major resistance. It acted as support here, support, 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 and then broke down. And what acted as support before will now become resistance. And we've had a really nice move to the upside. If we were to throw a Fibonacci extension on here just to get a visual, you can see we've definitely hit those targets. We go from this low up to this high, down to this low. You can see we've blown past this first target of 1450, and now we've come all the way up to this next level, which is 1550, and multiple resistance areas. Now let's take a look over at the dollar real quick. Dollar continues to move higher. Let's go to the daily chart. But overall, dollar continues to move higher. It's really gaining strength here. I think it could continue to squeeze up a little bit higher. Overall, the dollar's had a really nice move, and this chart doesn't really show it too well. It's the UUP ETF that mimics it, but I do feel as though we could see the dollar continue to push to some new highs up into this 99 area, which would be just above this peak, and potentially the 100 area. And as it goes higher, it could keep the wraps a little bit on the precious metals. But we are seeing the dollar move higher. We're seeing metals move higher. Bonds are moving higher. There is definitely money flowing out of the unstable currencies and countries' equities markets and moving into the U.S. assets and precious metals as the safe haven play. Now let's take a look over at Miners real quick, the GDXJ, you can see it's had a nice pullback. It is trading down in support. Same with the large caps, the GDX. It's pulled back as well. And if we look at the silver, which we are long SIL, it does also pulled back and trying to find support. Now, overall, if the broad stock market does start to rally here, we could very easily see the metals pull back. The fact that metals have hit our upper target, like gold, we got out of gold yesterday, our UGLD for about a 22% gain yesterday. We could very easily see these markets potentially correct and pull back. They've had a very nice run. We've locked in 22% in the gold. We've taken 6.5% on the silver miners right up near the top here. If this rolls back a little bit more, we'll be back out of silver and looking for a new entry into the metals in general with a new setup. So we'll see how things hold up. But if the stock market rallies, we're probably going to see money flow out of the safe havens. Silver miners could easily, silver, gold, and gold miners could all pull back very quickly to the next support level, which would be down here for the SIL, and could give us a new opportunity to get long at that point. Looking over at energies, natural gas down 2%. It's having this somewhat of a bearish kind of pattern where it's hooking to the upside, starting to reverse back down. We saw this pattern happen in crude, and more or less we're looking for it to continue to form some type of bottoming formation. We are getting volatility, big pop, huge drop, another pop here. As this starts to unfold, it could put in a bottoming formation for us to potentially get long, but we are still looking for lower prices going forward. Looking over at crude, crude is up about 0.6% this morning, and it's still continuing to chop around. It came down for our first target of the 51. It's had a very strong bounce. The first resistance broke through it, hit second resistance. Now it's pulling back and kind of whipsawing around. It did push up this morning. It's reversed back down in pre-market with some pretty strong selling this morning. Overall, the bias is still to the downside, and we're looking for some type of new entry point there, but nothing at this point just yet. Last but not least, let's just pull up Bitcoin real quick. Take a look at Bitcoin. Bitcoin has been a really nice run. It broke out of this falling kind of wedge pattern, had a nice pop, and it's kind of fizzled back out. It's trading down at support, building this longer term pattern that we've been talking about, how it's had this big run up, and now it needs to really kind of work itself out and consolidate. And of course, it's you can argue here it's in this kind of support zone and this wedge. It's going to continue to build a very large flag, and whichever way it breaks from this flag is could be a very significant move. If it breaks to the upside, I think we could very easily see it hit 20,000 again. If it breaks to the downside, we're probably going to fizzle back out and go back down towards the 6,000 mark, which was a pretty significant level back in time. If we go back and look here, you can see 6,000, very significant resistance. It was support and then broke and lost 50% of its value, and here it's popped and rallied back up. So we'll see if it can hold its ground in this kind of pattern that it's got forming here in this wedge. If it breaks out of this wedge, it could be a very significant move, either back up to test these highs from back over here, the 20,000. If we throw a Fibonacci measured move on there, we could actually get an upside target. If we go right down from somewhere around these lows up to these highs and down here, I'll just squish the chart to see the target. It puts us right back up to around this 19,800 mark. So that's where we could see potentially Bitcoin move to going forward here, up into that area. So we're keeping our eyes peeled for this big pattern here, this big potential breakout over time for this move to the upside. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.